Speaking of consumption, the trends have been very, very robust, not just for Zomato, but even for MakeMyTrip. Now, MakeMyTrip, of course, is not listed in India. It is listed in the US. And the numbers there have been looking very, very robust. In fact, the company reported the highest ever quarterly gross bookings and profits in the first quarter. Gross bookings are up a little over 31% year on year in constant currency terms. And MakeMyTrip also posted a profit of over $18 million versus a loss year on year. So it's basically a time of profits, all of it backed by very, very solid consumer demand. We have, in fact, the management joining in to talk about this going forward. Rajesh Magow, co-founder and group CEO at MakeMyTrip, is with us. Mr. Magow, thank you for joining in, and congratulations on those good-looking numbers. I want to start by getting your sense of demand. Now, a lot of this had to come, right? A lot of the revenge travel, the back to normal life post-COVID. And we've seen that in bookings too, whether it's destinations in Europe or within India as well. But you tell me, do you see a lot of this sustainable, these kind of huge jump in bookings that you've witnessed, both on the airline side as well as on the hotel side?
Yeah, and thank you for having me first. And yeah, you're absolutely right. I mean, we saw this demand coming, and then coming on the back of the last year, which was a very, very robust recovery year for us. I mean, if you compare it with the pre-pandemic, and we were quite actually optimistic getting into the new fiscal year, and also it happens to be a high leisure season quarter, and it played out quite nicely as it is reflected in our results. Will it be sustainable? My view on this is that, if you look at, let's say, July month, July was a slow month, but that was more because of, disruption caused by monsoon, more than anything to do with the demand. Demand was actually pretty robust. It was only because, the sentiment dropped because a few states were going through unprecedented rains and all. And as the August begins, we've seen bookings pick up again. So from demand side, I continue to stay quite positive and optimistic. I think it's fairly sustainable because the consumer, as we picked up just from trends in terms of consumer behavior, are increasingly looking to spend more or more portion of their disposable income more and more on experiences. And, and travel is right up there for the experience.
Rajesh, morning, and thank you very much for that. It's amazing to see the airline ticketing numbers, because in the month of June, there was that Go Air bankruptcy and flights were not taking off. So I presume supply would have also come down, supply of flights. And yes, despite that, we've seen such strong booking numbers. So then if you could give us some guidance about the second half of the year, particularly for the travel business, the airline ticketing business, domestic and international. You would have had some pre-booking numbers. We've got the World Cup as well, which India will be hosting. Yeah. So any indication of the pre-booking? And also just one more number I would like to know. How much higher are your gross bookings today versus the pre-pandemic peak levels?
Yeah, sure. So let me just try and address all the points that you mentioned. You're right. I mean, there was supply disruption thanks to GoFirst, filing for solvency, and hopefully, with DGCA approval in hand, they should be flying back again. But there was temporary disruption of the domestic supply, and and some of the other airlines also have planes grounded thanks to the maintenance requirement and so on. But come second half of this fiscal year, this is our conversation. We actually expect more and more supply coming in. A lot of the airlines are actually expecting to get more planes, arrive in the second half, and therefore the gap that temporarily got created between supply and demand should get bridged in the second half. And like I said earlier, I don't see any issue on the demand side in any case. So demand side continues to be robust. The overall consumer sentiment is really, really positive. And the temporary issue on the supply side should also hopefully get addressed, including, hopefully going back in the skies. So that should be good. Now, in terms of just our overall sort of gross booking numbers, which is close to $2 billion, from the pre-pandemic level, we've already recovered. It's like in the 20s, higher than 20% or more, higher than the pre-pandemic numbers. So we've started seeing growth in this fiscal year because we had already achieved the last year like almost full recovery at the gross booking level as we closed our fiscal year 22-23. From this fiscal year onwards, we've already had a great start, and hopefully this momentum will continue. We do have seasonality in travel, as I'm sure you would have some idea about it. So July, August, September is a lean quarter, seasonally, especially for leisure travel. All other segments of travel continue to happen. And then January, February, March will also be a lean season quarter. But, factoring all of that in overall for the year, I do expect that there's going to be at an industry level, and definitely for us, because we've been growing faster than the industry growth rate, year on year, definitely a growth year.
Okay, got that. You're sounding very optimistic. Mr. Magow, thanks for joining us. Could you take us through what, the market share has looked like over the past year or so? Just trying to get a sense of, if you have been able to increase that. And I also want a word on the margins because, compared to names like MakeMyTrip, I think you're at around 13-14%, whereas MakeMyTrip operates at somewhere around 40 to 50% in terms of the margin. So can you tell us what's happening on that front?
Yeah. Well, so if you really see just from an overall margin perspective, I think I don't think it'll be a fair like-to-like comparison, to be honest, because MakeMyTrip is largely air business and we are, a full stack shop, like literally all travel use cases that we have, including some of the new businesses that we have sort of, recently launched as well. For example, we launched in the market, in GCC market for both flight bookings as well as hotel bookings. And there are new areas that we've invested in the last 2-3 years as well. And it's just a question of, over time that you continue to keep improving the margin. And that is how we want to see. And at a scale, if you end up doing, let's say we clocked about 15% of adjusted operating profit margin, or let's say 13.5% of EBITDA margin, we only see that from here on, we will just continue to keep this momentum even on profitability and continue to improve our margins. If you start to compare us with even the global peers, and you would see the numbers are fairly comparable there as well. So I think the outlook, both from growth standpoint as well as profitability standpoint, we remain optimistic, and hopefully this trend should continue as well. And that's the way we sort of looking at it.
Rajesh, thank you very much for joining in and wish you all the very best for FY24, the remainder of FY24. Ambit, post the MakeMyTrip numbers, said that the stock or the company remains a play on the cyclical recovery in travel and the structural theme of rising online penetration with increasing market share across travel categories with sustained profitability. So that's the outlook by one of the brokerages on MakeMyTrip. And post the numbers, the stock too in the US has rallied quite a bit.